In my last video, we covered the fundamentals, confirmation bias, the herd mentality, and the basics of investor psychology. If you haven't seen that yet, stop this video right now and go watch it because you need that foundation before you dive into the deep end. But today, we're going beneath the surface to talk about hidden biases. These aren't the mistakes you see coming. These are the silent, subconscious patterns that govern your brain and drain your portfolio without you ever realizing it. The reason these stay hidden is that they don't feel like errors, they feel like logic. Your brain is evolved to survive in the wild, not to trade on Wall Street, so it disguises a catastrophic financial decision as a smart move or playing it safe. It's psychological camouflage. A visible mistake is like a fire in your room. You see it and you put it out, but a hidden bias is like a tiny leak in a massive ship. You don't feel the danger until you're miles away from the shore and the ship is already halfway underwater. After this video, you will have the investor's cheat code. You'll be able to spot the traps your own brain is setting for you, giving you an unfair advantage over everyone else who is just trading on emotion. The first is survivorship bias, or the winner's illusion. We only study the winners. We look at the one guy who turned $500 into $1 million with a crypto coin, but we ignore the thousands who did the exact same thing and lost everything. Nobody knows about this because losers don't get interviewed. Success is loud, but failure is silent. It's dangerous because you copy a strategy that only worked because of extreme luck, not skill. To beat this, you have to look deeper than just the data. Ask yourself, what actually happens to my life if I fail, and more importantly, what are the hidden variables that could cause me to fail that aren't even visible in the success stories? You have to find the traps before you step in them. Then there is the sunk cost fallacy, also known as the escalation trap. This is the feeling that you must keep holding a bad investment just because you've already spent a lot of time or money on it. Society teaches us to never give up, but in investing, never giving up on a dying company is the fastest way to go broke. You throw good money after bad and waste your capital on a sinking ship instead of moving it to a rocket ship. Imagine you're 2 hours into a 3-hour movie that you absolutely hate. You stay until the end because you paid for the ticket, but the money is gone either way. By staying, you're just wasting another hour of your life. Forget the past. Ask yourself, if I didn't own this stock today, would I buy it right now at this price? If the answer is no, sell it immediately. The third is recency bias, the horizon error. Your brain believes that whatever happened in the last few weeks is exactly what will happen for the rest of time. Our brains are wired for pattern recognition. If it rained for 3 days, our ancestors assumed a rainy season was coming. This makes you greedy when the market is at its peak and terrified when the market is at its bottom. For example, if Bitcoin goes up for a month straight, you think it will go up forever, so you buy in at the absolute top. Then it drops, and you think it will go to zero, so you sell at the bottom. The only way to win is to zoom out. Look at 10-year and 20-year charts and realize that markets move in cycles, not in straight lines. Finally, we have the endowment effect, the possession trap. You automatically value something more just because you own it. It's a deep biological instinct to protect our territory and our possessions. This makes you emotional. You start defending a stock as if it were a family member or a pet, but a stock doesn't care about you. Think about a rare skin in a video game. Someone offers you $100, but you say no because it feels priceless to you, even though the market price might drop to $10 tomorrow. Your ownership blinded you to the actual value. Be a mercenary. Treat your portfolio like a cold, hard machine. If a company's numbers don't add up anymore, fire it from your portfolio without a second thought. Knowing these 4 hidden biases is like having night vision goggles. While everyone else is stumbling in the dark, you can see the obstacles clearly. But remember, awareness is only half the battle. You have to be disciplined enough to act on what you know. In the next video, we're breaking down the 4 market cycles that almost always repeat themselves. If you can identify which cycle we are in, you can predict what happens next. I'll see you in the next one.